Hello and welcome to this special edition of Swinecast, featuring presentations from Swine Forecast 2009, a virtual conference featuring speakers from North America and the United Kingdom on topics relevant to this extraordinary time in the swine industry. The conference took place on Thursday, November 20th, and was attended by producer groups in more than 30 locations across the U.S. and Canada. Conference sponsors, in alphabetical order, were Elanco Animal Health, JBS United Incorporated, Pfizer, Swinecast.com, and Zinpro. At the end of the presentations, an extended question and answer period received questions from many of the producers gathered in small groups around the country. So, this is Swine Forecast 2009. Sit back and enjoy. Karol Flynn of Rabobank International shares years of agribusiness experience in the western U.S. She's responsible for covering issues in the U.S. grains and oilseed complex and sharing with us today on U.S. and international financing.
We were founded as a finance cooperative by farmers for farmers over 100 years ago, and the name is the result of a merger of the two regional cooperatives in 72. Our presence in the Americas started in 1981 when we established an office in New York. And I also want to emphasize that for the Canadians listening today, our Canadian headquarters is in Toronto with a very key regional office in Calgary. Next slide, please. Rabobank today is among the 25 largest banks worldwide. We're the only private bank with a AAA rating from both rating agencies. Next slide. We should be on the world map, Rabobank globally.
That's correct.
We finance agriculture in every major market in the world. Next slide. Including production financing. Next slide. Rabo AgriFinance is the ag lending group in U.S. and this shows where our offices are, and we have relationship managers throughout the U.S. Next slide. Corporate banking is serviced through regional offices with sector expertise. You can see the offices on this map. We have a network of community-based retail locations throughout California. Next slide. Back to Rabo AgriFinance, it's really a full suite of producer-oriented ag lending products, and we have a large portfolio and really stellar group of relationship managers. Next slide. Among our unique attributes, Rabobank has a dedicated research team to serve both clients and our internal research needs. I'm part of that team. It's a group of 80 people comprised of folks who specialize next in various sectors of agriculture and all have professional, academic, or personal backgrounds in farming. So it's a real pleasure to work with my colleagues around the world. It gives us a unique global perspective. Next. We should be at the range of publication slide, and it shows that FAR's knowledge base is a key part of our commitment, of Rabobank's commitment to food and agribusiness for the long term. After 110 years, we understand agricultural cycles. We stand by agribusiness in the good times and through the economic downturns. Next slide. So we find this gentleman with a bear showing up in his office. I imagine that bear is also sitting next to the farmer in his combine, facing nearly a 50% decrease in the value of his corn crop as he harvests. Or in the case of the U.S. right now, a lot of that corn crop's sitting out in the field. So let's take a look. Next slide. I included this slide because it shows at the most basic level the nature of a systemic financial crisis in a very simplified graph. It is a combination of quantifiable events, which we can track, but it's associated to human behavior and emotion, and in this case, apprehension is taken over by fear and panic. So it is a serious situation we're in, and we recognize that. Next slide. So in the case of the recent crisis, we have bank failures, various rescue plans, lots of politicking, and we'll expect lingering effects that will shape the global business environment, including agriculture. Next slide. So here's a key measurement of a bank's ability, confidence, and willingness to lend to each other. Credit availability is being seriously constrained in this environment, and we need to recognize this. This slide shows the spread between the 3-month Treasury bill and the 3-month LIBOR rate. It's essentially the measurement of perceived credit risk in the general economy by comparing interbank lending rates. And you can see that it's reached, let's hope, a critical apex in the last month. But it shows that banks really had a complete lack of confidence, and that credit has been seriously compromised. So it's corresponding with other events as the crisis has evolved. Next slide. The aim here is to examine how this chain of events has unfolded, and so what we can expect for both U.S. or North American and international funding, what we can plan for in agriculture. We should be at the table of contents. Let's go to the next slide. This is a busy graph, but it shows how things have evolved. None of these are probably news to anybody, but it's worth revisiting. The chart starts in August for a reason, because early August, the Dow fell by 400 points. It was absolutely alarming. European Central Bank, the U.S. Fed, and the Bank of Canada all injected funds in their credit markets to ease concerns. That fell because of credit concerns. And since then, it's been an absolutely wild ride. This graph tracks 2 global credit default swap indices, and essentially showing the insurance premium against business failure. And you can see that it's going up. It's not a pretty picture. Next slide. This chart shows a massive increase in FDIC-insured assets that were moved into the problem category. Next slide. And gradually, of course, the so-called real economy has felt the impact. Problems moved from the global to regional banks, from housing sectors to consumer sectors, from mortgage debt to other types of debt like credit card receivables. And the U.S. economy faltered along the way. The rest of the world followed. We can see similar trends evident, of course, as we all know, in Asia, UK, Europe, and emerging markets. So I want to emphasize that. It's truly a global situation. And that's how, that's why we can't really separate U.S. versus international funding. This is a global crisis. Next slide.
Okay, Carol, I'm looking at U.S. government rescues, resolution of crisis.
I do like that little picture of Polson and Bernanke bailing out water out of a colander. Let's go back for a moment to the slide before that.
Which says, thus transparency was needed?
Yes.
Very good.
Very good. So we've seen a series of rate cuts by the Fed. The rescue plan, of course, initiated, and tighter rules for the provisions of subprime loans, including a temporary ban on short selling. There's also been associated private sector initiatives. It hasn't just been a public sector event. There's been recapitalization strategies of various forms and consolidation of major financial institutions, such as the B of A takeover, the Bank of America takeover, and Merrill Lynch. So let's go and have a look there at Paulson and Bernanke. I still think they're working hard at doing what they can. But the point here in showing this picture is this really what history will likely focus on, is the various bailouts. I suppose McCain and President-elect Obama should be in there as well. It's been an interesting time. Next slide. So by October, the crisis was fully international. This graph on the upper right show the three indices showing equity markets around the world, and I'll just go back to that. I won't don't go back to it, but go back in your mind to the human emotion part of it. This is full panic mode when you see those kind of declines across the board. The important story here is something that agriculture has known for a long time, and that is that we have entered a time of great interdependence between developed and developing regions. And so we've arrived not just when the G7 came up with all their coordinated statements and pledges, but it's really evolved into that historic gathering we saw last weekend of the G20 that we now see. And so the new global economy really unfolds in this crisis. Next slide. This is rather busy, so we'll just say that U.S. and international funding has been seriously compromised. We don't need more of the bad news. Pass on the next slide, please. Ned, I should be at the major U.S. grains prices slide.
Pass on the next one. That's where I am.
Yep, very good. So I'm just going to I cover U.S. grains and oilseeds for the FAR team, and we'll just use grains and oilseeds as an example of how agriculture has followed this financial crisis. Grain markets, of course, have declined precipitously, and Rabobank has long promoted a view of commodity prices as a combination of many variables, whether we're in a boom cycle or a bust cycle, and this has just proven it. Some of those variables have stood out the last, since midsummer, and the outside influences in the financial crisis have ruled the day. Exchange rates, oil prices, investor behavior, supply and demand. I'm in Memphis, so has left the building. Apologies to Elvis on that. Over the longer term, we expect we'll return to some more fundamentals, but it just is very clear that agriculture is closely tracking the financial crisis. Next slide. So we're back to table of contents, and we'll project some implications for agriculture where let's remember that it's far from insulated, that it's global in nature, and most importantly, because ag is so highly resource dependent, whether it be land or water, seeds, fertilizer, fuel, labor, that the real enabling input is capital. So we are going to have to learn to operate under the constraints that this crisis has created for us. Next slide. Let's pass over the ag banking slide, and we'll go directly to what this means for ag credit. Do you see that slide, Ned?
Yes, ma'am. That's where we are.
Very good. The general belief is that since ag banks are more deposit-based and characterized by stronger customer-borrower relationships, that they are not as affected as Wall Street. However, the general expectations is that there will be less aggressive lending in the ag sector, that there will be increased restrictions or covenants at loan signing, and because of the higher cost of capital, we can probably expect some modestly higher interest rates. Next slide. Of the large commercial banks that service ag, Rabobank is the only one that focuses exclusively in food and agribusiness. We're very proud of our long-standing relationships with our customers. We take this crisis very seriously, and through monitoring the broad trends and then the short and midterm volatility for agriculture, completely agree with both Mark and Steve's comments that volatility is going to be the key issue. We take a global view and we understand how we try to make this meaningful for our regional and our community level relationships. So let's go back out to the global view for a moment, and here's our optimism for agriculture in general. Next slide. What does it mean for ag? At the macroeconomic level, income and population growth will continue to drive demand for food. This slide shows income growth on the x-axis, population growth on the y-axis, and the size of the bubble represents the absolute size of the population of countries. So you'll see the emerging economies near the right-hand portion, upper right-hand portion of the slide, and the developed economies towards the lower left. We can project that emerging economies, despite the crisis, will continue to drive the momentum for increasing global demand. In fact, when we adjust the slide, please move to the next slide, you'll see the bubbles for India and China and the emerging economies. Everything has shifted left because we're adjusting for income growth, but there still is growth. And in fact, the latest IMF report shows an average global, or projects an average global economic growth over the next year at 2.2%. So to show this in another way, go to the next slide, please. We believe that economic growth is slowing, but it will continue. And who knows where those dotted lines will end up, but it's still being driven by developing nations, and economic progress fuels increased meat consumption through the increase in protein demand. And we want to make sure we keep an understanding of these key drivers. Next slide. This is the U.S. dollar weakness since 2002. Obviously, it doesn't include the last few months, but I left it this way to show that we are ultimately connected to these drivers, and we cannot ignore these relationships. So this said the depreciation of the dollar was a key driver of the commodity price boom, of course, including crude oil and a lot of the other factors we've discussed. But farmers and livestock producers will need to watch carefully these exchange rates, as Steve and Mark have talked about, which contributed to growth. Next slide, of course, to the exports, which was a huge, the rally couldn't have been more welcome. Next slide. But this volatility that we've seen, now here's all the complete reversal of the relative valuation of the U.S. dollar against a number of currencies, not necessarily on its own strength, just based on global economic concerns. We're going to see, we expect a real change in exports. So back to grains and oilseeds. Next slide. We've really seen an alarming decay of trade. These three graphs for corn, soybeans, and wheat are showing net sales of U.S. grains, which is, in a very simplified way, intentions, exports, less cancellations. And essentially, we've seen serious problems across the board. This is an environment we're working in now. Next slide. So the implications for the individual. That's where we're headed. Next slide. Will some lenders exit? Maybe. We stand by that farm lenders, ag lenders were not as exposed. However, producers can expect that banks will follow guidelines more strictly, that there will be an emphasis on a risk-based pricing model, that higher operating costs, greater potential need for operating financing with volatile input side and squeezed margins makes risk management key. And this sounds like it's going to be the theme of the day. A close relationship with your ag lender is critical. Next slide, please. So really, watch the cash position. Be really cautious regarding the capital investments. We are monitoring, of course, the value of the real estate in the ag sector very closely. Happy to be closing one of the highest profitable eras for farmers and a reduced declining debt to equity ratios. Farmers have pretty strong balance sheets right now, but we're watching those things. Next slide. Be careful to control expenses. Make sure your risk management strategies are in place. I want to emphasize again that relationship with your ag lender is more important than ever. Next slide. So the serious news is we can't ignore the crisis. We can't predict when it will ease, but the processes needed to repair, both from a public and from the private sector, have begun. And unfortunately, we don't have a crystal ball. The next slide. The good news is, despite the fact that both U.S. and international funding has been compromised, that there are strong ag lenders out there with credit available who are committed to long-term relationships to get through this down cycle. I just would like to underline, plan accordingly.
That's Karol Flynn of Rabobank International sharing today on U.S. and international financing on Swinecast. Your connection at your convenience. This special Swinecast episode featuring presentations from Swine Forecast 2009, a virtual conference sponsored by Zinpro, Swinecast, Pfizer, JBS United, and Elanco Animal Health. Swinecast is a production of Truffle Media Networks, which is solely responsible for its content and may not reflect the views, opinions, or positions of our sponsors. This Swinecast program is designed with you, our listener, in mind. Thanks for hooking up today, and let us know what you thought about this program and possible future topics you'd find of value. Send those comments to me at feedback@swinecast.com. Always good to be with you. I'm Ned Arthur, and we'll be talking soon.